Unbelievable news out of Wall Street this week. The investment app Robinhood will allow limited buying today of stocks that had to freeze yesterday due to wild volatility.
Small investors banding together used Robinhood to buy stock in GameStop and a few others like Bed Bath & Beyond, driving up the price to hurt hedge funds trying to short sell those stocks. Robinhood's CEO denied the freeze was made at the request of big hedge funds. He says SEC rules forced Robinhood to suspend buying of the shares. A class action lawsuit has now been filed accusing Robinhood of unfairly manipulating the market because people who do not use the app could still trade those stocks.
Joining us now, financial expert with the Wealth Management Group, Craig Bolanos. Craig, good morning.
Hey, good morning. Interesting intersection of the internet, social media, and Wall Street. The story is fast and furious.
Absolutely. So bring us up today as where the battle stands as of this morning. Who is making money and who is losing money?
Well, in investing, there's always going to be two sides to the trade. Someone's making money and someone's going to be losing. But what we know as of this morning is whether it be, Robinhood, some of the other online brokers, they're going to start allowing trading again in these securities in a more limited fashion. So I think you're going to see everybody from Wall Street Bets and millions of users logging on, jumping on their keyboard this morning and trying to push some of these stocks that they're touting higher.
Craig, Robinhood raised about $1 billion by drawing on its credit lines to allow this limited access. But what do you think about what they did yesterday in terms of restricting access to stocks like GameStop and AMC and Bed Bath & Beyond?
Well, as a consumer, they have to be absolutely outraged because everybody wants access. That's the entire idea of Robinhood, was democratizing the investment area and giving everybody equal unencumbered access. And when there's systems, with clearing firms and settlement, that they couldn't handle and settle everything out to restrict the trading, I certainly understand the outcry. There's no doubt about that. What's going to be the long-term ramifications? Nobody knows, but I think this is a momentous shift on Wall Street because you see the power of the internet, how communities of investors could come together in specialized low-price stocks that happen to have a lot of short interest and cause some trouble for some of the big hedge funds who might be betting the other way.
So what's the latest then in terms of these communities coming together? Are they circling up on Reddit and perhaps looking for their next target?
Well, absolutely. You see that, and it's expressed into so many other stocks, whether it be AMC, the list goes on and on. But I think what a lot of investors want to know is they see these large, gigantic moves in a stock like GameStop, and anytime the moves are so big, it can be unnerving to many. But what I want to reassure people of out there is if you have a 401k, if you have an IRA, the online communities are not going to be coming to create any wild swings in the large market cap stocks. We all have to understand together that this flurry of activities and a handful of low price stocks that happen to have an awful lot of short interest or short sellers involved in them. So it's not going to disrupt the financial system, but it's a very interesting show that's going on and it's newsworthy.
All right, Craig, thanks so much for that explanation this morning. Let's check in with you again soon.
Yeah, thanks, Craig.
You're welcome.